Um, all right, it is 10:03, so we're gonna start, and a more people end up coming in little by little. We'll let them in as they come. First off, good morning, y'all. Hope y'all had a great weekend and great last week. I apologize. I was running a little bit late last week. I was in the office early, then I had to drive back home to take my son something so that he had it for summer camp that was in my car. So apologize we couldn't do it last week. We couldn't do Monday Mortgage Minute last week. But we'll be here this week and next week, right before I leave to New Orleans for NAREB National Convention, which should be fun. Hopefully, I'll be able to see a few of you there. Pretty sure, Teshka, you going again?
You know it.
Perfect. All right, so I'll see Teshka there. I know some other people from South Florida that have never been to a convention are going as well, so that's exciting. If you don't know about NAREB, you should. We can talk about it separately, but if you do know about NAREB and you are a member, you should definitely try to get to those annual conferences. They are a great, great time. But we're going to jump into the news for this past couple weeks, and most of it is pretty positive, at least for the outlook of the future, which is nice. Home builder sentiment was down to 42. Buyer traffic has fallen tremendously since last year, from buyer traffic being at a rating of about 40 in July of 2023 to being at 27. And it shows clear signs of a slowdown in new purchasing. So for those of you who don't know, the National Association of Home Builders, they come out with a home housing market index every single month from 0 to 100. And anything above 50 signals expansion, anything below 50 signals contraction. So in this case, them being at 42 is showing contraction. That rating is down from 43 last month, but their buyer traffic, that number being so low, really shows what market we're kind of in right now and leaning into, which is more so a buyer's market, in my opinion. With low building confidence from the National Association of Home Builders, people are taking the overall build numbers and increased inventory and saying we will be seeing a residential real estate crash. I mean, I'm usually all the time on online and
Christopher,
in articles.
come here,
Somebody's
please.
got to mute here.
Can you give me that bottle right there?
Who it is? Who's the culprit today? Felicia. All righty. So,
Sorry.
no, you're good. You're good. You're good. And basically stating that we're going to see a residential real estate crash. I think we're going to see a real estate crash. I think it's in the commercial side. Commercial bonds are not doing well. People that took out commercial leases have defaulted left and right, and the banks are holding on to them. But that's a conversation for a different day. In terms of residential real estate specifically, they're basically stating that builders are overbuilding in states like Texas and Florida. However, when you look at what is being built, it's very clear that those builds aren't for the average consumer. Single family permits were actually down by 2%, and multifamily housing permits are up 16% from last month, and they're barely down year over year. I think they're down about 3%. And last year we were talking about multifamilies being built a lot. That's the same sentiment so far this year. So not to consider that even on the single family end, those homes that are being built out, they're usually sold up front before actually the building process starts. And the amount of supply, even with low buyer traffic, if we compare it to completed homes, is about 1.7 months of actual inventory for built, already completed new homes. Initial jobless claims are increasing little by little, and continuing claims look like they might hit 1.9 million soon. Initial jobless claims came in at 243,000 last week. I know that we've been sitting at about 220,000 for months now. So for us to see that uptick 2 weeks in a row is a bad sign for the housing industry, or sorry, for the job industry, but it's a good sign for housing moving forward. With the Fed sentiment about cutting rates and things like that. The number of initial claims that start to become worrying, like in terms of what the job industry would look like, is usually when they get to about 290 to 300,000 consistently. We're not there yet, but this is factored in with how Consumer Price Index came out a few weeks ago. showing lower than expected inflation numbers. This is all cause for the Fed to consider dropping the Fed funds rate. Now, there is a meeting next week for the Fed on, what's today, the 22nd? On the 30th and 31st, so Tuesday, Wednesday, next week. I would be very surprised if they cut rates next week. I think it's too soon, but the September meeting is the one everyone is betting on right now. And I'll touch on what I think this means in a bit. But September 17th, 18th is the next meeting after the July one. And I think that that's where we're going to see the Fed start to cut rates as long as the data continues to stay consistent. It doesn't need to show worse. It doesn't need to show anything except for just consistency with the numbers that we're receiving. Purchase applications are currently down 14% year over year, but refinance applications are what's carrying the data, showing 15% increase from the previous week, and they're up 37% year over year right now. A lot of people are trying to do refinances. Most of what I see, they're cash out, meaning that they're taking out money, they're paying down debt, and utilizing that extra money to be able to have it in their back pocket. A lot of people are trying to use up their equity. As long as they're careful with it, they should be okay. The beauty about cash out refinances is that the maximum you can go up to on a primary is usually 80%. So, even if they end up getting upside down for whatever reason, they'll still have enough equity to be able to sell it on the market as normal, which when you think about it, helps them if, they were ever go into some sort of pre-foreclosure or something like that. Hometown Heroes, there's about $54 million left in funding. So if you have a buyer that is pre-approved and needs that Hometown Heroes money, they need to get going ASAP. It looks like it's moving quicker than anticipated, even with a slower market than last year. So make sure to get some closings and take advantage of the program because I think last year was relatively around the same, where we saw huge dips in the money being taken out the first month, and then it gradually slowed down little by little. But ultimately, I didn't expect half of the money to be gone before the end of the month. Because we're seeing inventory growing and less people on the market and things like that. But there's a lot of people taking advantage of it. So if you have clients that are pre-approved in the Hometown Heroes program, it's after this call, I think you should be making it to all of your pre-approved clients that need that money and say, there's only $54 million left. That's half the money in 22 days. We need to get moving, right? We need to look, we need to find something that we like and get under contract on it because it won't be here forever. Now, rates are slowly coming down even before the Fed cut. Remember, I said that there's an unnatural spread between the 10-year Treasury and mortgage-backed securities, where mortgage rates were about 3% higher than the 10-year Treasury. And in a more stabilized or normal market, it's usually at around 2%, 200 basis points. And I mentioned this a few months ago when we started to see softer inflation reports, that the spread could start to come down, and it has. For those confused, these are investment vehicles for long-term investors. So you can buy mortgage bonds and get those returns based on whatever that coupon is at the time, 6%, 6.5%, or 7% for the 30 years, or buy U.S. Treasury bonds and get those returns over that 10-year period, which as of today is around 4.2% return. That's pretty much it. That's as simple as it gets with how they work. But usually the spreads are not too far off. The 10-year will be at one number. Mortgage-backed securities are about 200 basis points or mortgage rates are about 200 basis points or 2% more. And since 2022, that spread has been about 3% or 300 basis points. So to see it kind of come down, even with no big news to move rates in general, that's huge for the industry in general. Now, to kind of touch on what I was talking about before with the Fed cuts, I do feel like this year the opposite of what usually happens will end up occurring as well. I think usually we'll have a slow winter, starts to pick up around spring, super busy summer, starts to slow down around fall, and then we pretty much not get into a halt during winter, but for the most part, it's usually the slowest season of the year. I think the opposite happens this year. We can see because of when the Fed could start cutting their rates in September, we can see rates start to dip to the low sixes, and we can end up having a busy end of year as opposed to what usually happens, which is a busy summer and slow winter. We're literally at the end of the chaos, in my opinion, I believe, and you guys just need to keep getting in clients and nurturing them, because when rates dip, everyone will want to come back at once. From what I'm seeing on my desk, I see a lot of people are interested in purchasing. They fill out the application with the realtor, and then once we get the pre-approval going, they start to either second guess, they look at the mortgage payment, they're a little bit more hesitant than they were last year, and that's normal. Right? We're all human. We all have to worry about the other bills. I talk to people all the time about we only look at what's on your credit. I can't determine what your childcare expense is, how much gas you spend to go to work every single month, how much you pay in groceries, all of these things that people do have to factor in. I think as rates start to come down, as inflation starts to normalize and people's wages start to catch up to where inflation is now, which should lean into about the end of this year, next year, we could see it start to turn around again. And I don't think that we're going to see like something crazy 2020, 2021, but I think that people are going to have business coming, right? So you guys have outlasted a lot of other agents in the industry that didn't make it past last year. And you guys just need to continue to hold off and hold on until the end of this year, 2025. And we should be able to see some big turnaround towards the end of this year, leading into 2025. I want to give you guys a story on a buyer brokerage agreement that happened not too long ago. I had a realtor referred over a client. They signed the buyer brokerage agreement, and they were looking for houses. The buyer went under contract on about 2 or 3 different houses, backed out on inspection on all of them, was looking with the realtor for a few months, and then one weekend ended up going to an open house, met the listing agent directly, and long story short, tried to undercut the buyer's agent at the time. And I told him that that he needs to make sure that he communicates with that agent, because that buyer's brokerage agreement will come into play. And surely enough, the buyer was not able to close because of that buyer brokerage agreement. So the buyer had to come in with 10% down, and their cash to close was almost like $70,000. And then the buyer brokerage agreement hit at closing. It was an extra like 16, 17 that they didn't have, and wasn't able to close. At the time, he wasn't my client. He started off being my client, but the same way that he did the buyer's agent, it's the same way he did everybody else in the transaction that was helping him from the beginning. So goes to show that, one, the buyer brokerage agreement works in your favor for sure. And two, just to make sure that the buyers are aware of that if they try to move forward without you, especially if you're doing all the work that you need to do. I mean, the amount of properties that this guy went to go see, and the fact that he went under contract on everything like that was
just making who couldn't put no house.
was telling, right? It's not like it's just one property, one contract, and that was it. So people are better. There you go. All right. So that's my first buyer brokerage agreement story that I come across, and it's only 22 days after July 1st. I know that they're not going to start it coming into effect until September, but they're being implemented and they work. Just having that conversation with the client up front is the most important thing. Last thing I want to touch on is with you guys being real estate agents, realtors, you guys, if you are really good at the craft that you're in now, you can also get certified and get certificates and licenses in other aspects of real estate and not have to do that. Not have to do that job, right? For instance, I could be a loan officer and I can have my real estate license as well as a realtor. And I can either close on my own real estate deals if I wanted to and keep the commission, right? Because I have my real estate license to do so. That's really the only difference. Or be able to help out a client that, let's say, didn't want to work with a realtor for whatever reason, right? I don't have my real estate license, but I can go that avenue, right? I've already passed the class. I'm taking too long to take the test. But I say that to say the opposite for you can happen, right? You can get certified or licensed in different avenues of real estate, whether that be as a loan officer, whether that be as a title agent, as well, whether that be as an inspector. And you don't necessarily have to do the job. You can get paid off of the referral because all you need is the license at that point, right? You have the license, you open up a different avenue of income for you. For instance, you already, as a realtor, you're already referring buyers over to your loan officers, right? Well, technically you can get paid legally by having your loan officer license as well. So as this buyer brokerage agreement, or these buyers start to not want to use buyer's agents more and more for whatever reason, you can hedge, right? Protect yourself. And this is something that no other loan officer will tell you, right? But you can hedge and you can protect yourself where you can get your loan officer license and refer it out and get paid on that without a problem on that deal. It may not be much. You may get paid a quarter of a percent, half a percent. Loan officers don't get paid much per transaction, but it's something extra that you can hedge on the buyer agent side as well. And you're already sending that deal over anyway, right? So just different things to consider, not only on the loan officer aspect of it, because that test is relatively difficult to pass, but as well on the other aspects of it, right? As a title agent, right? As a mobile notary, all you have to do is just get certified as a notary, and you work with the title company that you send a lot of business to and say, look, I'm a mobile notary. Whenever you need somebody to go out, I'll do it. And they get paid 150, 200 bucks for 2-3 hours. All right. So just think about those different avenues and different aspects where you don't necessarily need to that be your focus. You don't need to advertise that as your focus, but you work with the referral partners that you already work with now to get paid a little bit extra. Do you guys have any sort of scenarios or any questions or anything like that before we wrap up for the day?
Mike, good morning. Good morning. I came in a little late. Did you make an announcement on if rates had dropped this morning, or I mean not this morning, but did you see rates drop at all in the last week?
Yes, so rates are coming down. I mentioned that even though there hasn't been big news about mortgage rates, in terms of like, or big news that will alter mortgage rates, I would say, besides maybe consumer price index that came out a couple of weeks ago, the spread between the 10-year treasury and mortgage-backed securities is thinning and coming back to normal, what a normal market looks like, or a more stabilized market looks like. So rates are slowly coming down for FHA. You could probably get a 6.75, 6.5, if you have decent credit and not really have to pay points. And if you do have to pay points, they're very minimal, which is not something that we've seen for a long time. And that helps with buyers cash to close tremendously, because 1% extra, you're talking about 400,000 is $4,000. So you are starting to see that these rates are coming down and the liquidity is coming back into the mortgage market where they're not having to pay extra or that much more extra in terms of closing costs, and it keeps their cash to close relatively low. I think that we're going to, as Hometown Heroes kind of fizzles out and we go back into normal FHA conventional stuff, even though Florida Bond and other down payment assistance programs will always be available, I think it's going to be where people are now in a market where, in a buyer's market, where they can come in with their down payment, whatever that amount is that they have saved, and then just get the seller to cover their closing costs without a problem because of the amount of inventory that is staying on the market. But yes, rates are coming down, not only because the spread between mortgage-backed securities and the U.S. Treasury is thinning. They have been pretty much stable for the most part this past couple weeks. Like I mentioned, FHA 6.75. On conventional, you're at about 7 1/8, 7 1/4. With no points, which is great, which means you can get to the sixes by paying maybe 1.5 or whatever, depending on who you are as a buyer, if you do want to go that route or not. So we're seeing liquidity back in the market. We're seeing rates come down little by little. And I think that by September, it's going to really start to maybe not come all the way down like that from one day to the next, but we're going to see it start to trend down lower and lower till we get to like the low sixes on FHA and mid sixes on conventional, in my opinion.
Okay, sounds good. Thank you.
Any other questions or scenarios you guys came across?
Hey, good morning, Mike. I
Hey.
just have a quick question.
How you doing?
I'm good, and yourself?
Good.
You did say about MLO license. Like, where can I go to look into that?
Gold Coast.
Okay.
You can do Gold Coast. You can do online. You can do an online class. The course is relatively easy. It's the test that ends up being very, very difficult. The course is only 63 hours, I believe, so you can get it done in like a week or less. It's usually the test that you have to study for.
Okay, thank you.
No problem.
All right. So Mike, right? So
Yeah.
I haven't done a realtor transaction in a long time. But as you know, my mother, she wants to purchase something, right? As far as like a duplex or whatever. So Hometowns Heroes, you could do it on a duplex as well.
Yes. So they allow you to do it from 1 to 4 units as long as you don't pass the maximum loan amount, which they base their maximum loan amount off of the max for the 1 unit within the county. So for Broward on an FHA, it's like 651. But as long as it's below the 650 threshold, she could buy a duplex without a problem.
Okay, and another thing. So this might sound crazy, but I just need to know if it makes sense. So say someone gets approved for 400,000 on a single family. On a duplex, triplex, fourplex, does it increase or is it still the 400,000?
It does because you're adding back the rental income for the other units that they're going to be renting.
That
Yeah.
makes sense.
Yeah.
Okay, cool.
Yeah,
Yeah,
usually
those-
you're on average you're at about like an extra 75 to 100,000 more.
What?
Yeah.
Oh, I
And it
like that.
depends on the rent and stuff like that, but yeah,
Okay, cool. Cool. Appreciate it.
no problem. I need clarity. HTH can only be on an FHA loan type. No, it's on conventional as well. So FHA, conventional, USDA, VA, those are the 4 main cookie cutter loans, we call them. No non-QMs can do Hometown Heroes or Florida Bond at all. But no, it's not only FHA, it could be conventional as well.
Is there any, Mike, is there any assistance out there for people who's not going for these, like people who's going for the non-QM loans, like they're doing a bank statement loan or well not, I know not BC what do you call it, not that loan, but what about other loans? Is there any assistance for those?
Non-QMs, the non-QM lenders don't allow for like the CLTV aspect of things. They're going to have their minimum loan or their minimum down payment. So even if you, for whatever reason, were allowed to do CLTV, there most of the time the minimum down payment is like 10%. And that's what their maximum loan to
Gotcha.
value and combined loan to value is as well. So the person will still have to come in with 10% no matter what, plus closing costs if they qualify for it. So no, because really it's just the non-QM lenders they don't have like FHA allows you to go up to 105% combined loan to value. So your down payment or your loan to value is 96.5%, right? That's the 3.5. But then they say your combined loan to value can go up to 105. Same thing for conventional. Non-QM lenders don't have that. Combined loan to value can go up to X. Their loan to value and the combined loan to value usually the same, which is usually at the maximum loan to value is usually 90.
Okay, makes perfect sense.
Any other questions? Scenarios? No? All right, y'all. Well, we'll be back next Monday. Same time. I'm going to see if I can get I don't want to spoil it, but if I get it confirmed, then I'll let everybody know probably by Friday. What we'll be talking about on Monday for Monday Mortgage Minute. So I will see you guys next Monday at 10 a.m. and hope you all have a great week. We're here if anything.
Thank you, Mike.
Thanks.
No
Appreciate it.
problem. No problem.
Thank you very much, Mike. Have a good day, guys.
You too.
Thank